morning friends, welcome to SNRJ Investment Academy. Today we will be reviewing about SBI Small Cap Fund Direct Growth Plan, and we will be discussing what are the investment strategy to invest in this fund. Since the market is trading at a very low valuation and there was a correction in the market, the small cap funds are very attractive, trading at a very attractive prices. And especially this SBI Small Cap Fund, which is having good history of generating wealth, is a very good business opportunity, investment opportunity for retail investors. But need decision to be taken by doing your own analysis, and there is a risk in every small cap fund. So you need to consider that, and you need to have a good investment period also. You need to have a patience of at least 3 years for this fund to give good return. So only those amount which you don't require, you don't want that amount to use in some other places, that amount only you need to invest in a small cap fund and wait patiently for returns. And you can do 1 year SIP also in this fund, and then hold on to that investment for generating wealth. We'll be going to the video, and in video you can see the analysis of this fund in detail. Small Cap Fund Direct Plan is having NAV of 46.933 as on 15th May 2020. This fund is having a CRISIL star of 4 star, which is very good, and the fund is mainly a small cap fund. And this fund is having a 52-week high NAV of 62.37 and 52-week low of 41.26. So the fund NAV is trading at near to this 52-week low. In the fund returns, if you can see, this 1 month return is 0.6% and 3 months return is minus 24.6, 6 months return is minus 18.7, and 1 year return is minus 11.5, 2 years minus 12.4, 3 years 1%, and 5 years 8.6%. If you can see the 5 years annualized return, then the rank is 1, and further the rank is coming down. But if you can long term view, if you have, then this fund is given good return. And due to current market crisis, when the markets gone down, especially the small caps are trading at a very low valuation, then also this fund is showing green returns for 3 years and 50 years. That is very good. And if, further the performance of the fund can be compared with its benchmark, then we can get a good idea whether the fund manager is doing their work in good way, or whether the fund is performing very badly. That we will do in the coming section. And the benchmark S&P is S&P BSE small cap, and the asset size is 3280.30 crore. And if you can invest minimum invest in this 5,000. Currently, if you can see, this fund is controlling the investment. Earlier, when the small cap valuation was very high, the fund stopped all new investments. Right now, when I checked that time, it was allowing to start new SIPs, but lump sum investment was not allowed. You can check in the website whether due to current situation, whether they are allowing to invest a lump sum amount. I would advise you do SIP for at least 1 year, but you need to careful when the valuation is coming up and when the market is going up. You need to stop your SIP. No need to invest when the level is high. That time you need to hold on to this whatever investment. You don't need to withdraw. When the market is coming back, then you need to hold the investment and no need to do further SIP investments. And after that, when the market is trading at a very good valuation, when you are getting around 25 to 30% analyzed return, you need to withdraw. If you are not withdrawing that time, then what will happen next during the next correction, whatever earning you have already got, that will be gone down. So in that case, the normal wisdom says that you need to do long term investment and you need to hold on to this. That is right, but to maximize your return, you need to book your profit. So that time when you are getting analyzed return, I'm talking about analyzed return, and when you are getting analyzed return of 25 to 30 percentage, then it is very good that you book at least some portion of your investment, and you keep it in your liquid fund or in savings account. After that, when the market is coming down again, you can reinvest that. That strategy will do very good return. Otherwise, that long term the fund is giving good return, and you will get good return over your investment in small cap fund. If you see the portfolio of this fund, the main sectors are engineering 14.69%, miscellaneous sector 10.56, services 9.52. Mainly we need to check banking and finance sector. The exposure is 7.65. So majority of the exposure is not in banking finance sector. It is expected that in the coming days banking and finance sector will show much more correction because of the economic crisis. So it is good that this fund is having minimal exposure in this sector. Still 7.65% is a considerable investment in any particular sector, but the thing is that fund manager is very experienced, and the fund house is also very good fund. They hope they will do very good, do the job very good way, and you will get good return. The speciality of small cap funds is that it was already started its correction from 2017 onwards. So during this market correction they have corrected, but not that much when there is a sudden correction occurs, because already this was trading at very low valuations only. Then after that, when the correction occurred, again it got corrected, and this valuation is very good. The bottom risk is minimal in these funds compared to other large cap funds because of this current situation. Normally the bottom risk is very high in small cap fund compared to large cap fund, but due to current situation, since the small cap funds were trading at very low valuations even before the crisis, so the downside risk is very minimal. We will check whether five-year chart of SBI Small Cap Fund. You can see the fund was very able to manage its downside fall from 2018 onwards. 2018 January fund got its top valuation. After that the market was going down, and fund also got some correction, but still it managed its performance. We'll compare its performance with the index, then we'll get a good idea. See the 3 months, 6 months, 1 year, 2 year, 3 year returns of this small cap index, BSE small cap index. It all are in red, and it's in near to 3 months return is minus 27.1, 6 months return is minus 19, 1 year return is minus 22, 3 years minus 39, 2 years minus 39, 3 years minus 31. So fund was this index is showing red, negative returns only for up to 3 years. Compared to this, if you can see our SBI Small Cap Fund, it was giving a good positive return for 3 years and 2 years, and the 1 year return also we will check here. 3 months 27, 6 months 19, 1 year 22. 3 months here minus 24, 6 months minus 18, 1 year minus 11, 2 years minus 12. So fund was able to minimize its downside negative returns, and 3 years and 5 years it given positive return. So compared to benchmark, the fund is giving good return. Even though it is in negative, then fund due to this situation every fund is showing negative returns only. Compared to benchmark, if a fund is giving less negative return, means the fund is performing well, and in coming days when the market reverses and market goes up, the fund will give good return. And before the crisis also this fund was giving good returns only compared to other fund. So you can, if you are thinking of investment in small cap fund, then SBI Small Cap Fund will be a very good investment option for you. And One more thing is that if you are investing in small cap fund, do invest only the surplus money which you don't require within 2 years, 3 years. That money only you need to invest, because this particular sector is very risky and you will not see good positive returns within 2 years, 3 years. Hope this fund will be giving good return, but as a normal wisdom, you need to have a patience of 3 years plus 3 years plus. Normally people will say 5 years, but currently the market is going down, and then there was the fund was giving negative returns from 2018 onwards. So considering these facts, you should be seeing good returns within 2 years, but take it as a 3 years, and you need to invest only that money which you don't require within 3 years. That only money you need to invest, and you need to forget. No need to panically check what is the situation, what is the return. You can start an SIP for 1 year. Don't invest long term in SIPs, because when the market is going up and the market is trading at a peak, if you are investing through SIP, then when the market reverses its direction, it will show negative return only. You will be getting less return. You see, I will show you. If you, for the 5-year chart, the person who started SIP from 2016 onwards, he'll be investing their money even at the peak also. 2018 January, the peak was there. That time also he would have invested. All those returns will be negative only during current situation. The current situation is that market is corrected, so for 1 year market will be in bottom, trading at the bottom level only. Then all of your SIP will be giving investing in a low NAV, and after that when the market goes up, you will be getting good return. That way you can plan your investments in SIP. This fund is very good. I would recommend you to invest if you are planning for small cap section, and you need to have a patience of 3 years to see good returns in this fund. Hope this video was helpful for you, and if it is helpful for you, then please click the like button and subscribe to our channel for more such videos. Thank you.